And welcome once again to Investor's Edge. I'm Gary Kaltbaum, your host. Hey, thanks for being with us today. Glad you're here, ladies and gentlemen. Happy that you are listening. It is Friday the 15th, 2026. We're in May. Hope you're having a good day. Hope you have a good weekend. A lot to discuss today. Hope you're listening. On a few avenues today. The markets, the economy, your job, your industry, suspect activity out of Washington, D.C. from the top to the bottom, and whatever else. And when we do Washington, D.C., we have to say up front, we take no joy. You'll see why. This is Investor's Edge. As we said, serious talk on everything that affects you. We'll do the markets, the economy, your job, your industry, them too. And if you don't get this radio show in your city, we'll post it at GaryK.com. We'll also post it on our X feed. If you don't follow us on X, you should. If you'd like to email us, just be nice, respectful. Somebody, I think one of the main anchors from CNBC posted that they thought Jay Powell did a wonderful job and saved the economy. I took that on. And I started out by saying that's a load, and I apologize because I shouldn't say that's a load, but I disagreed emphatically. You know what I think. We'll discuss a little bit of that today. And whatever else. Thanks for your emails. Everybody's been very nice. We'll be nice back. So, there are certain things that we watch. Always of import. Number one, as you know, we scan a crap load of stocks and sectors every day. But we also watch very closely what we call intermarket work. What is that? Well, if oil prices go up, probably airlines, cruise lines, and the like don't do well. If oil prices come down, they do better. Well, you get the point. If a state taxes the hell out of their wealthy, a state that treats their wealthy well will get a lot of those people. Currently, you have states that are raising New York wants to raise property taxes on the wealthy, and now it's down to $1 million. At least that's the proposal. While here in Florida, the governor is trying to get through no property taxes. Cause and effect. And to our eyes, the most important cause and effect is the direction and the movement in interest rates and energy prices. Energy prices up into the war were cooperating very well. In fact, I was saying probably 2 or 3 times a week here, boy, they're so stable. And we would say the same thing for yields all the time. Well, the war came, and unfortunately, oil prices, well, let's see what I got for you today. The July Brent crude 109, light sweet crude 101. Much higher than expected. Unfortunately, the president miscalculated. When he comes out and says, oh, we expected 200, he's lying, he's making it up, he's embellishing. But that doesn't matter if he is or not. What we have to deal with is the facts at hand. And oil prices are way up. And you know this every time you fill up your gas tank. You know this because watch what happens if it stays this way. You will see fewer people at restaurants, retail, and as you know, some of the worst acting stocks are restaurants and retail. Cause and effect. And we're not going to go back and forth on the war here, whether it was right or wrong. The people in the president's purview are saying, and the president is saying, well, what would you rather have, being nuclear bombed or higher oil prices? We'll let you all decide on all that, whether true or not. We have told you all his intelligence told them they weren't even close. He also told us things were obliterated. And then right before the war, they said he had 2 weeks. So we don't know what to believe. But that's okay. We're dealing with facts here. Oil prices have skyrocketed. And the longer they stay up, not good. But there's now another component, and that is yields. Whenever I'm on TV and I'm asked often about what do I think about the Fed and all that, I always answer back, just watch yields. If they're stable, if they're going lower, terrific. If they go higher in a meaningful fashion, that's going to be bad news. Well, interesting enough, and by no coincidence, listen to me carefully, oil prices started moving up. The date was March 2nd. On March 2nd, the 10-year yield was right around 4%. It's now 4.6% and is at a year high. The 30-year yield was at 4.7. It's over 5.1 now and is pretty much at a 20-year high. Now, what does this mean to you? It's a headwind. Number one, your mortgage rates, if you're looking to buy a home, are going higher. And of course, that will not help a housing market that's already on its back to a decent extent. What else? It's called the cost of capital. The cost to get loans go higher. That goes throughout the economy. Headwind. The two most important parts of the equation is the cost of capital and the cost of energy, and both are going north on I-95 right now and not stopping. Today, the 10-year yield almost hit 4.6. Close at 4.595. That is bad news. And I say it's bad news because it looks higher. And why else is it bad news? All the talk of our central bank lowering rates. They can't lower rates now. What have I always taught you and told you about what a central bank should do? I always taught you and told you central banks don't have to do too much. But unfortunately, this Jay Powell is an egomaniac and thought he can get away with anything, and he created a lot of distortions. Unfortunately, all the central bank has to do is stay in line with the bond market that knows most. And all I can tell you, our central bank's at 3.5% right now, but the 10-year yield is 4.6, and the 30 is at 5.13. They're now not so in line. The only way to get in line is to raise rates. And you know who's president, and you know who doesn't like that. Up next, we'll go through that and much more. This is the one and only Investor's Edge. So, you have a president that has been cursing out Jay Powell all the time, calling him every name in the book because Jay Powell didn't keep lowering rates, even though that's all he did in the last year until the last couple of 2 or 3 meetings where he thought he was fine, and he was. The president does not know what the hell he's talking about and has no understanding of monetary policy. Meaning, you better be in line with the markets, and if you go too far, you're going to create distortions. And easy money is not always the answer, which has me go into the next part of the equation. He just nominated, and he is now the central bank head, this guy named Kevin Warsh, that has a history of not being easy money, not lowering rates. So how the hell did he get the job? Did he promise the president, don't worry, I got you back? Well, the problem is, if he starts lowering rates now while the market is screaming inflation, brought to you by tariffs and a war, he'll only make it worse if he lowers rates. Just remember, let's hearken back. We went into COVID. Jay Powell took rates down to zero, the short-term rates, went to zero immediately. And then he printed to $9 trillion. $9 trillion. And bought up the whole freaking bond market, which took the 10-year yield down under 0.5%. Which enabled 3% and less mortgages, which had people refinance, can't blame them, and new houses, people buying houses get these low mortgages, which at that point nobody wants to sell anymore. Why would I sell a 3% mortgage? Because interest rates started backing up because he created inflation, and then he had to play catch up to it. So we ended up calling here the 3-7. Who the hell's going to sell 3% mortgages to buy a 7? And that's how the housing market went straight up in price, where nobody can afford it. But there's always an end game. Let's call the affordability factor. And now we got massive inventory, and prices aren't collapsing, but they're normalizing in a interesting way. And why we don't think it's going to be 08 again, and we predicted 08, we still think there can be more problems. And now interest rates are going even higher, while the president says we're in a golden age and we are the hottest thing going, and we're not. And unfortunately, he has nothing but yes men around him. He needs me. I'd explain without a bias, but he wouldn't listen to me. So we're in a little bit of what I would call the soup. And today, the Dow was down 530, NASDAQ 410, NASDAQ 100 455, Russell 2000 2.5%. Semis had a bad day. Now you're saying, oh, well, we just had it's profit taken had a good move up. There's only two issues, though. Oil's going higher and yields are going higher, and that must be watched. So very rough day. And I'm not hearing anything good coming out of China when it has to do with Iran. Not hearing anything good. In fact, after the president left, China came out and said something, not using the words "we're putting him in his place," but having to do with, hey, Iran gets to be Iran. We're not going to get in their way. That's what came out. So we'll see how it plays out. Was it a distribution day with volume today? I'm going to guess yes. I don't have my final numbers, but even if it didn't, price was icky today. Very icky. Cost of energy, cost of capital. There are already, I don't know if you know this, but I do Fox Weather Channel every other week. I don't do the weather, but like tomorrow, I'm going to be talking about 4 in 10 Americans in a poll, and I'm not a big believer in polls, but they did a poll and it was widespread, no politics. 4 in 10 Americans will not be taking a single trip this summer because they said affordability. Others saying they're still paying off debt. Others saying we're working to save money. That is the outcome or potential outcome of what we're seeing in oil prices and now yields and the intangible confidence. So just letting you know, we're not here to harsh your buzz. We're here to really speak straight to you at all times with no bias. When we talk DC, we can't stand any of them. So we let loose on all of them. When they do right, we'll compliment the hell out of them. Like I have to tell you, I think the president handled the Taiwan situation perfectly coming out of China. And you know what that is? Say nothing. China's been kind of quietly threatening to overtake Taiwan for a couple of decades, and they don't. They say it's theirs, but they don't do anything, and we'll leave it at that. So the president got that right big time. Well done. But other things going on. And again, the cost of capital, the cost of energy. Two very important parts of the equation, if not the two important parts of the equation. Up next, what else we got for you today on Investor's Edge? And welcome once again to Investor's Edge. I got dozens of emails from men thanking me for bringing up taking the PSA test. I got many of you to go do it. When you are of a certain age, absolutely. Next up is the big colonoscopy. I can't wait. No, thank you. Anyway, take care of yourselves. Health is everything. It is true. It does not matter who you are. You can be the wealthiest man on earth. You don't have your health. Doesn't matter. We've always tried to impress upon our sons about drinking and drugs and things like that, and keeping yourself in shape, doing the same for you. And of course, you get to decide. Advanced declines today were about as bad as can be. Up-down volume is not good. Get this, more new yearly lows than new yearly highs on the New York and NASDAQ, which is quite amazing. Quite amazing. Today, a little flip-flop. Software stocks, actually pretty damn good. CrowdStrike has done a big U-shape from the lows to the highs and into new high ground. It was up another $12 today. Microsoft was up $11 today. That's a lot weaker, of course, but very good day. Adobe, a stock that has been absolutely destroyed in the software realm, that was up $11 today. So software, with the Dow down over 500 and the NASDAQ down 400, software had a pretty darn good day. Would have been a lot worse if software was poor. Even the weakest software stocks were green today. What wasn't green was most everything else. Of course, oils were green today with oil prices, but they're not very bullish. Some defensive issues. Insurance is somewhat defensive, green. But you know what's getting hammered again? Even more. When you have a chance this weekend, go look at ITB. It is the U.S. Home Construction Exchange Traded Fund, a new yearly low. Go look at the XHB. This is the home builders. Not at new yearly lows, but pretty damn close. And anything housing related. Home Depot is at a new yearly low again. Lowe's is close. Restoration Hardware is right there. Williams-Sonoma, right there. How about the Sherwin-Williams in the Dow? New yearly low. How about Whirlpool? New yearly low. So we have been telling you for a while, stay away from everything housing and housing related, and it is just worsening. Why? Number one, Powell. Number two, interest rates. Just remember, all these distortions you are seeing in housing is an outcome of Powell injecting himself too much. And by the way, it was okay for him to do some things. We're in COVID. Ease monetary policy, sure. But printed $9 trillion? Take the 10-year down to 0.5%. And by the way, do not forget the other part of that equation. Screwed every saver. Your money markets were zero. And again, it sent housing prices skyrocketing where nobody can afford anymore. And I can tell you in many areas, it's still about as unaffordable as can be. Prices are still very elevated. That's the outcome of him as we normalize. And hopefully I'm right that it does not turn into 08. I don't think it's going to. But what the hell do I know? We'll see. What else? You and your money. The markets. Fairness. We like fair. We like full and fair disclosure. You know how recently I told you I screwed up the NVIDIA trade? My full and fair disclosure. We'd rather tell you our failures than our successes. Why? Who better to check and balance oneself than oneself? Now, when I say to you we want full and fair disclosure, we would like that from our leaders. And as you know, our leaders are being made fun of for their insider trading that we would be indicted for, tried for, and if found guilty, go to jail for, yet they do those things, and they do it in plain sight and don't give a crap. You have people that are heading up committees like the pharmaceuticals and are buying pharmaceutical stocks before announcements. Defense stocks before defense announcements, where government spends a crap load of money on those defense companies. In other words, crooked. And in case you don't know, there has been a move afoot for quite a while to right those wrongs and not enable these people to trade, especially in the areas that they are overseeing. What a concept. Full and fair. And remember, they're getting into our markets. And they're doing it in ways that, if we did it, would be illegal. And it's tiresome. Don't you think? Aren't you pissed? I am. Isn't it enough that they're running $2 trillion deficits? Isn't it enough that they've taken us to the point where our first $1.2 trillion of our tax dollars is going towards interest? Isn't that enough? We just found out that the president's been doing a crap load of trades also. The president. He purchased $500,000 to $1 million worth of NVIDIA stock on January 6th, a week before the Commerce Department officially approved the sale of NVIDIA chips to China. I'm only going to mention one. I can mention others. Doesn't that piss you off? It does me. Nancy Pelosi's been doing it for years. Doesn't that piss you off? We're supposed to be looking up to these people, thrilled with them, and they're trading on inside information, amongst other things they are doing. We take no joy. Because of this, we went independent many years ago. I'm registered Republican just so I can vote in the primary. I got no use for any. I'm looking for heroes. I haven't found a one. And I've never understood the ultimate love of these people that are taking advantage of their positions in life. The positions where they're supposed to be above reproach, where we can tell our children how terrific they are. I can't do that. So just letting you know, the president is trading on insider information also. Yay! And we already know about all his announcements and all the big buys and sells. Up next, we'll get off of that. Much more. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. All right, so this is what I'm noticing. Number one, the semiconductors had a rough day today, but they are so elevated. Pullback mode. To what extent, I don't know, but they're way above the above, and it looks like probably going to go back into what we call new areas of basing. the semis. And as you know, the artificial intelligence component and all that has been out there. Next, all the areas that we have told you about to avoid, they remain avoids, except the software has been coming around. But autos and auto dealers, most medical, there's a few that are strong, but if I had 100 names in medical and 5 strong, that's most medical. Retail, terrible. I'm not sure I have one name now in shape. Since Ross Stores broke the 50-day, I don't think I have one name. Travel related. Oil prices going up, forget about it. Airlines, cruise lines, hotels, casinos. Mentioned again, the housing and housing related, absolute horror show. A lot of the financials, though the big banks have been holding up, usually always hold up pretty decent, though regional banks worse. Except for tobacco, consumer staples. Terrible. Gold and silver, been trying, rolled over today. Why would gold and silver roll over today? Well, the dollar gets stronger when interest rates go up. Go look why. And by the way, they really hit gold and silver today. Transports. Well, I can tell you the truckers, I think, pretty darn good shape. And the numbers, I think we have mentioned to you, there's one person we follow on the trucking business. You go on Twitter or X and just put in Freight Alley, FREIGHT Alley. That's Craig Fuller. He pretty much is the smartest dude when it comes to these things, and he's pretty good at it. That said, in the transports is Avis Rent-A-Car that went straight north and straight south and has been affecting the transport index, and they need to get rid of it. Today, we've been saying that steel and some of the metals mining have been strong. I got to look them over, but they got hit today. Why would they get hit today? Well, commodities will get hit when the dollar gets stronger. Go look up why. We're still not thrilled with China. Anything below the 50-day. And when I say a lot of financials, I mean a lot of financials. And today will not look good on a resume, the action. And it sold off into the close because yields stayed near the highs of the day. And if yields keep going higher, I'm not so sure there's a lot good I'm going to say when it comes to the market. Because it is a defining force in the market. Always has been and always will be. Our president had better figure out what to do about these oil prices. I think many a mouthpiece on TV, including the politicians, have been a little too sanguine. Notice the big word, sanguine. Oh yeah, we're fine. Everything's going to be good. And soon as this happens, that'll happen. Well, I can tell you it's now May 15th. May 15th. Oil prices broke out on February 27th and especially March 2nd. We're now 2.5 months into this. The economy has its way of being able to get used to things. I'm not so sure how long. Let me add another part of the equation. Most foreign bond markets, let me take that back. A lot of the important foreign markets, their bond markets are under pressure, meaning their interest rates are going higher, meaning their cost of capital is going higher along with ours. It's trouble. Potential trouble. We'll keep you informed as we move forward. Wish we had better news? Would love to give you better news. But boy, oh boy. Even before today in the recent little distribution, half the market, we have told you, under no uncertain terms, were in their own private bear markets, downtrends, bearish markets. Ain't getting better, except for some of the software. And now we broke out in yields. Market's going to have to deal with that. You'll have a great weekend. Yeah, I know, I harshed your buzz. Drive carefully. When you get home, do like we do. Make sure you hug your family and hug your children. They will feel better. You will feel better. I promise. Stay well. Be well. Always appreciate your time. Talk to you soon. Bye-bye.